I got to remember when you do this. Hello, brains, and welcome to another edition of the podcast Potluck. It is an extension of On the Edge with April Mahoney, and this is going to be a riveting conversation. I've got three major players in the industry of credit restoration, taxation, and investing. And these ladies are here to join us, to educate us, and prepare us for what's going to happen in 2019. It is going to be a roller coaster ride without seatbelts. Okay, so first I want to introduce Francine Rogers. She is the president of Purposeful Credit Solutions here in San Diego, California, and she is a credit restoration expert. We have Lisa Artzberger. She is with Five Rings Financial, and she is an investment strategist that's going to talk to us. And then we also have Janice Woods, and she is an state employee with 28 years of experience, and she is a tax advisor. So, ladies, thank you so much. And before we get started, I need to know what you guys brought. I brought some Sakatumi cake. Mama, 89 years old, and she's still trying to sock it to me, okay? And what did you bring, Francine?
Fig bars.
Did you bring enough fig bars for everybody?
I brought enough fig bars for everybody.
All right. And what did you bring, Lisa?
I have homemade pretzels with chocolate and
wow.
caramel corn.
Ooh. Did you make those?
Tasty. My sister-in-law did. I'm at a party, actually.
Look at that. At a party, doing a party. And Jan, what did you bring, Janice?
Well, April, it's baking season, so I brought some of my homemade pumpkin bread and some red grapes for us all to enjoy.
Well, this is going to be fantastic. So we want to jump right in on the conversation because we have a lot of information to get to, and we want to give everybody an equal amount of time. We want to start with you, Francine Rogers. How did you start Purposeful Credit Solutions, and what is the purpose of your business, and what should people know about their credit?
My business is Purposeful Credit Solutions, and I'm a credit restoration specialist. And what I do is I look at people's credit and I help them improve their score. But more importantly, I have them use their credit to help leverage their credit towards wealth. And it's very simple techniques. I have some clients that don't necessarily need help with their credit, but they don't know much about leveraging their credit and in order to build wealth. And building wealth is just retaining the dollars that you have. And
right.
So that could mean like applying for a 18-month zero APR credit card, so you can alleviate that interest for the next 18 months and pay off that debt faster. And I help a lot of my clients do that. They don't know about that. They're like, you can go ahead and transfer your balance like that? I'm like, absolutely. You can transfer it from here to wherever as long as you don't pay any interest. I also help businesses, small businesses, finance their expansion operations in order so they don't have to use their personal credit. I use my personal credit to open my business. Please don't do that. I work with so many lenders that will help new entrepreneurs launch their businesses. So I'm in the business of credit restoration and helping people retain more of their dollars.
Right. And we want to talk about credit and credit scores too, because I want people to also understand that you can be underemployed or not employed at all based upon your credit scores. We want to jump to Lisa Artzberger, and she is a financial strategist with Five Rings Financial. Tell us how you're showing up in the world and what people need to be aware about in finance. And we're going to go into that a little bit deeper, talking about their 401ks and investments and what has happened in the past. But tell us initially what you do and how you do what you do.
Well, I got into the industry several years ago. Back in 2001, I had lost half of my retirement income because I was completely at risk in my 401k IRA. And as you know, when you have everything in the stock market and or mutual funds, you're at complete risk for the market. So that's when I started learning about some of the different investment vehicles which would protect us from that market fluctuation. And that's what I help people with.
Well, you do an excellent job, and you host a wonderful event. It is Wine, Women, and Wealth. And so we're going to talk a little bit more about that. Janice Woods, you have 28 years of experience. You're a state employee. You're a poet, a writer, a real estate broker. You are doing the most, sister girl. And you also host international students, exchange students. So tell us a little bit about what you do and the world of taxation these days.
Okay, as you mentioned, I'm a tax advisor and a tax preparer. So I help those with income taxes, trying to get them to save that money as much as they can and get them a refund. Also, sales tax. Help people with sales tax. Make sure they're properly filing their sales taxes. That's that same income that goes on to income tax returns. So I do guide them the best I can and give them the best advice to save their money. Also, you mentioned I am a poet writer. This is my first book, and I'm so excited. It's called Persona, Dialogues with God. And as some may know, persona is the aspects of someone's character that is presented or perceived by others. Again, I'm very excited about my book. Hosting international students. It's a great opportunity to learn different cultures and to help them to learn our culture. I am an international traveler, and I always seek out the natives, want to be around the natives, know the foods. So these children, there's cost and involved in bringing them here for schools, but I find them a home. You know, they're placed in my home and they become part of my family. So I'm making sure they get fed and get to school and in their activities. Also, I'm a real estate broker, as you mentioned. I've been investing since 1988.
Wow. Wow. Well, and I am here as your hostess, April Mahoney of On the Edge with April Mahoney, but I'm a color in the white spaces because I want you guys to know what I'm hearing. You know, I'm out there in the blastsphere. If you don't know, you ain't been watching Facebook, Twitter, Instagram, because I'm all over the planet. But I'm hearing what people are saying, these entrepreneurs, and I'm hearing how they're struggling, and I'm hearing how they want to be solopreneurs, but I really want to encourage some collaborative and so some co-op opportunities because it is busy out there in the information superhighway, and folks are really going to be jacked up if they're not prepared. So we want to talk to Lisa Artzberger. Tell us a little bit about what happened in 2001 and 2008 with regards to investing and how people really, got caught behind the 8 ball because, again, I've been watching the stock market. Here it is, December. This is the worst December on record. All of a sudden, stock market is up 1,000 points. All of a sudden, it's down again. The fluctuation, that's signaling instability. I don't care how you try to pretend the trickery is there, but it is up and down like a roller coaster, like I said, with no seatbelt. Please tell us what we need to do and what we need to look towards.
So true. Yeah. Back in the 80s, a lot of big corporations offered pensions to their employees, and which were in safe investments. And you didn't really receive your pension, of course, until you retired from the company, and you would receive your monthly dole. Well, companies were basically unable to afford the pensions any longer and started requiring employees to put the onus on themselves and invest for themselves in the 401k. And what happens in the 401k, they're working with, a broker maybe at Charles Schwab, TD Ameritrade, or what have you. And I think it's a really good habit to get in because they're investing their money at least tax deferred. However, they're going to be completely at risk of the market. And I learned a long time ago that it's really good to diversify and not necessarily have all of your money in that basket, because
Right.
then you're completely
Oh, that's
at
okay. Don't worry
risk.
about them. They partying too. Tell them to whatever
Oh
they doing,
yeah.
to turn the music up, whatever. Hey, because we had the party ass potluck. It's good. That's good. Go
Trying to
ahead.
find a quiet place over here is impossible.
And there's a party. It's holiday time.
Yeah, yeah.
So okay, so they're struggling with that, and so they are. A lot of times, people don't even pay attention to the free money. Every company I've ever worked for, when they said it was time to sign up for the 401k, absolutely, because they're matching dollar for dollar. But again, I learned to watch my investment. I learned
Right.
to kind of pay attention to, a mutual fund or a bond, or what is actually going on. If you're getting stock options, all of those type of things, people really need to pay
Right.
attention to that, because these companies, they're investing in you, but you're also, investing in them. There's no pension. It used to be where you work with a company 20 years and you were guaranteed something after the 20 years. Those days of entitlement are long gone.
It's
We need to teach
long gone.
money. We really need to teach money how to work for us instead of us continuously working for it. Isn't that
Yep,
right,
that's right.
Francine?
Absolutely. And you also need to change your relationship with money. Right now, as of 2017, we had over $1 trillion in credit card and unsecured debt.
Mm-hmm.
And with that kind of debt, it's very hard to save for investing and just to have a regular emergency fund. And so I always tell my clients, you really have to delve into the reasons as to why you got into this debt. I had to do the same thing, and you have to change your relationship with money. And once you begin to make changes to your life and to your routine, you'll start to retain more and more of your dollars. And now that money you said you didn't have to put into a 401k or to invest or to save, now you have it.
You do have it, and you have to pay attention to the history of money. They used to use beans, they used to use feathers, they used to use furs. Now they use old dead white men on dirty paper. And it's not a good look. But again, if you go back and listen to some of my other podcasts, you'll hear how we're talking about cryptocurrency, which is a new type of currency, a new kind of money, and people are going to have to pay attention to that. Jan Marie, okay, so you got the investor and you got the person that's trying to work on their credit, but what about the person that's taxed? Tell us a little bit about what's going on in the world of taxation without representation.
Okay, well, there are some changes for 2008 filing tax returns. Some of these changes are the change in the 1040. There's a new 1040 form. There is only one form, one 1040. No more 1040 EZ, no 1040A. And here's what the form is going to look like. If you guys can see that, it's a half a page. That's page 1. The exemptions are gone. And this is page 2. That is the 1040. So again, no more 1040 EZ or 1048, only 1040. Some of the other big changes is, as I mentioned, the personal exemption is no longer there. It's a zero amount value. Last year was $4,050 times the number exemption. Well, that's been eliminated. But they have increased the standard deduction. So for 2017, the standard deduction was $6,350. Or for 2018, that's almost double. It's $12,000. And for the married, it was $12,700. Well, that's $24,000 now. Also, for the head of household, last year was $93.50. That again has almost doubled, and it's $18,000. So even though they've taken the exemptions, away, they increased that standard deduction. And so even for some people, that may be a plus. They may not need to itemize no more. And you may not need schedules. But my advice is for you to check your withholding amount to be sure you have enough deductions so you won't owe money in the end.
Yeah, like claiming 10, folks, you ain't got no 10 people in your family. Everybody trying to claim that so they get all the money, and then they jacked up in the end, and they got to turn around and get with Francine because their credit is messed up because the IRS done garnished their check.
Yeah, and I've done a lot of negotiations with the IRS, yeah.
Well, they need to just make sure they save all their receipts too. That's important. Saving anything you out there spending, save your receipts on everything.
Also, you were talking about this is for 7 years, this new tax proposal.
Right, exactly. It's only for 7 years until 2025. So that's the tax forms, that's the personal exemption, that's standard deduction. And there are a couple of other changes. There's, let me mention to you about, the child tax. The maximum per child qualifying child is $2,000. And that increased from $1,000.
Mm-hmm.
The medical that used to be 7.5% of your adjusted gross income is now 10%. Another change is the qualified residence interest. That's from homes of 7,500. That's the maximum.
Mm-hmm.
Overall limitation of itemized deduction for those big wage earners. That used to be a limitation for them. Well, that's been suspended. And that, again, is for 7 years, so 2025. So now they can claim all their deductions. There's no limit for them. And I think that is a plus for them, the big wage earners.
Mm-hmm.
The standard mileage has changed. Last year was 53.5 cents. It's now 54.5%.
Let me ask you a question really quick about the deductions. You know, you used to be, and I'm just rattling off the top of my brain, $4,000, $4,200 for each individual person as a deduction. That is no longer. You have one standardized deduction. So if you are a family of 50, you still get that same number of deductions. Is that correct?
For standard deduction. That's for standard deduction. Some people still itemize. So if you're itemizing, that makes a difference.
Okay. All right.
But this year there's no, so if there's only one form, so you have a Schedule C, you'll still have the Schedule C to itemize?
Yes, if you still need to itemize, Schedule C is still there. It's just that some people use the itemized, may not need to, based on the increase. It may be beneficial for them to keep the standard deduction not itemized.
Okay.
So, there may be changing how. But one thing we need to keep in mind that the federal and IRS are separate. They're different. So even though the IRS form changed, the federal didn't. They did. They do have some increases, but the form didn't change. So let's say you took the standard deduction on IRS. You may still need itemized on the, on the FTB and the Franchise Tax Board. So you got to weigh it out for yourself and see what works to your benefit.
Okay.
And know that for those.
Can you sit back a little bit? Because I'm missing your sweet face. I'm missing your lips.
Okay, I'm sorry.
That's all right.
And for those who are in financial crisis, know that there's the VITA. I do VITA, which is volunteer individual tax assistance for those who make up to $54,000. So we're out there helping. And so it's not just those with low income, disabled people, the elderly, we're out there helping them. So you send some of them over as Francine if they need help.
I definitely will.
Okay.
Yeah, some of the other changes, the corporate tax rate. It drops from 30, this is for corporate C, 35% to 21%. S Corp is at 20%.
Wow.
And remember about the Obamacare. Remember that's been a big issue, this health insurance. Well, that penalty is gone. So that was the Obamacare that was under the Affordable Care Act. That penalty is gone.
The penalty is gone, but the insurance might be gone too. So,
and that's what a lot of people know. If they don't have to get health insurance, a lot of people probably won't get it. They're not going to get penalized for it. So a lot of them just say, well, we're not going to pay for it.
So, Lisa, I want to ask you a little bit about investing again. Again, like I said, it's such it's not as complicated as people make it seem. I think they really should educate themselves on investing and really what this looks like and some of the key terms. But what are you seeing as some of the safety nets? Again, it's a very volatile market right now, and people are really concerned about what's going to happen, long term. Can you give us some suggestions on how we might be able to safeguard ourselves, or what to look out for, or how to diversify maybe?
Yeah, absolutely. In fact, a lot of people consider putting money into the safe side, and they have a lot of money in the bank or CDs, and they're just not getting the return on investment. And then the other side is the riskier side, of course, which we just talked about, the stock market, the 401ks and the IRAs. But everyone's asking me, where can I put my money where I'm going to have a really good upside, not necessarily the downside?
In your mattress.
And yeah, and exactly. We're recommending the fixed index accounts, and to be able to put into a fixed index account depends on if you have a big bucket of money to put money into, then you can of course get a better upside, even as high as 20% on a monthly basis or 12%. Yeah.
Now, can you define that for my brains? What is a fixed income account?
Well, what it is, it's you can invest, like I said, either with a bucket of money or within a life insurance policy. So
Okay.
either way. And with a bucket of money, your upside potential, of course, is going to be greater. But a lot of people are opposed to the fixed index accounts because once they put their money in, the company wants to hang on to it for
Right.
10 years. And so you need to commit to saving your money for 10 years,
Okay.
which to me, that's my retirement money. So I'm okay with that. And you can still get to the money up to 10% per year, but you do need to commit to putting it away for a while.
Okay.
But there's no fees on that money.
But there's
And
no
it's,
instant
it's a
liquidity.
pretty
So
cool
if you
way.
need to liquidate, you can't liquidate. You're locked into this for that amount of time, like for the
Well,
lack
and
of a better
you
term, like a
can, but you
CD or
just have
something
some
like that.
surrender fee.
Okay. All right.
Yeah, you would just have, and you have surrender fees on CDs too.
Right.
So it's not any different than getting out of something else. But what it does is it actually gives you the upside of the S&P 500 directly without giving you the downside. So instead of having some broker trying to determine which stock or which mutual fund to put it in, you're getting exactly what the S&P 500 is offering, which is the most robust way to get the upside of the market. And then when the market goes down, you don't go down. It's like a ratchet wrench. Whatever you've locked in, you keep, and everything that you've gained, you keep.
Right.
And that's one of the principles of saving and growing wealth is don't lose money.
Right.
Rule number 2, refer to rule number 1. Yeah.
Right. And
That's
again,
good.
that's where diversification comes in. So if you have a large chunk of money in a fixed index fund, then you can trick it out in other ways. You can have other vehicles that you can get that cash if you need to pay that car note, or you need to pay that mortgage. Someone's got sick and they weren't able to work, so that you don't necessarily have to have your credit damaged. Tell us some of the things that you run across with your clients, some of the major pitfalls that they fall into, Francine, when working with them. Like you said in one of your previous Facebook videos, people don't take care of their basic responsibilities first. They doing these extravagant trips and all this kind of stuff, but their rent's not paid, the car note is late, and those are the major impactors.
There's a lot of different things that I see. Sometimes I don't want to see, but like I said before, excessive debt. Just, I opened my business on my personal credit. So I have $9,000 in credit card debt, and I am freaking out. I've seen people have $80,000 and $90,000 in credit card debt. So no. And so I'm thinking, gosh, I guess that puts into perspective my little $9,000 in debt that I'm like budgeting every month trying to pay off. But excessive debt or car payments. I have seen people that have car payments in excess of $2,500 a month, and they
Oh,
are
wow.
not making anywhere near that amount, and trading them in every 3 or 4 years or leasing them. And $2,500 in car payments and like $3,000 in a mortgage payment. And then that isn't counting food or internet or cell phone. That's just those are those expenses. So their expenses are in excess of $9,000 and $10,000, and their income isn't even close.
Wow.
And so, they're in so over their heads, and they're like, "Can you help?" And I'm looking at them like, you're gonna have a come to Jesus moment, because
Yeah.
keep this
Can't help
up.
it.
And I've
Exactly.
had to do that more and more. I try to be very encouraging, but sometimes you just can't,
Right.
because if you don't take a hard look as to where you are at, you will have nothing left for retirement, and you
Right.
will lose everything you have. And so the excessive debt, and my next year, and I have right now, I'm doing this financial goal resolution for next year, where I have people identify 5 things that they want to do in order to eliminate their financial stress. And now the second day is to pick one where you're going to focus in on, and you're going to eliminate that one thing, and then
Right.
go on to the next one. And I always tell people, success is in your daily routine. You have the money to invest, to save, to do whatever you want to do. You just have to look at your daily routine, i.e., stop buying coffee every day, i.e., stop
Mm-hmm.
going out to eat, stop taking
Right.
vacations, stop
Right.
incurring overdrafts in your account, minimize interest. You have the money. You just have to make some small changes to your daily routine.
Absolutely. And let me tell you guys what I'm hearing, because I'm talking to everybody on the planet, and everybody wants to be a coach or an entrepreneur or a solopreneur. You're going to be entrepreneur. That's what you're going to be.
Yeah.
Okay. Because number one, they're commingling their money. Okay. Your business account is commingled with your personal finances. There's no differentiation. You're not paying your taxes. You don't have your business set up in the right an S corp, an a LLC. You don't even know what you're doing, and you're talking about you coaching somebody else. You're gonna get them to 6 figures. Okay. And there's so much noise out there. There is so many coaches out there that are still trainees. And I love y'all. I really do. But you are not really paying attention to what is going on. You're just trying to be somebody's buddy, somebody's friend, and it's not working. Okay, so then you look at the established coaches, the people that have been out there 10, 12, 15 years, really making a difference and an impact. Well, you can no longer be a solopreneur. You're going to have to look at some collaborative efforts. Maybe one person does finance, maybe one person does business writing, maybe one person does marketing. Pool your resources together, get a platform, because you out here charging people $3,500, $4,000 to be with them 3 or 4 months. Really? Number one, they're going to cut you short because their money is going to end up funny. And then number two, like I said, you got all these coaches out here. Everybody's doing the same thing. So why not pool your resources together, lower your price, and move volume? That is what 2019 is about. It's about moving volume, getting people together, bunching them up, showing them what you have, creating platforms to make it more user-friendly and make it more affordable. Because a coach is the last thing they're going to need if they've got bad credit. A coach is the last thing they're going to need if they can't pay their taxes. A coach is the last thing they're going to need if they have no money to invest.
Yes.
Okay? So all of you guys, really take to heart what these ladies are saying to you, their skill, their expertise. They know what they're doing. They deal with this day in and day out. Before we conclude, though, I want to ask each one of you to give me just some words of encouragement, because I'm really afraid for 2019. Again, Lisa, you were there in 2001 when the dot-com crash occurred. 2008, it was almost the greatest recession until President Obama, went in and did some magic and got us on stable ground. And here we are back in that place again of instability. Please, each one of you give me some suggestions that we can share with our brains to really kind of get prepared for what's going to happen, so that we don't see the light at the end of the tunnel and it be a freight train. Lisa, can we start with you? Lisa, can we start with you? Can you give us some
Yeah, my
suggestions?
first Absolutely. My suggestion is to A, diversify, and B, to connect with a professional like myself or Francine or the other gal that can
Janice.
help you figure out your budget, and it basically refinance your finances if you need to.
Mm-hmm.
Right, Francine?
Right.
Absolutely. My suggestion, I implore you to and people don't want to hear about budgets, but all a budget is
Yeah.
that you're telling your money where to go. You're in control of this.
Right.
A budget is not something that's restrictive.
Right.
You're just saying, okay, you know what? I want my money to pay my mortgage. I want to put it away for emergency funds. I'm in control. And that's all it is. It could be whatever you want it to be, but you're in control. So take control of your finances today, right now,
Yep.
and you'll be fine.
Absolutely. And Janice, tell us, what we gonna do now. We can't dodge the bullet when it comes to taxes, but at least I can say, if anything else, we do live in the greatest country in the world, and I have traveled the world and I have seen, okay, and paying your taxes, you should really thank God for that. You have the ability to get all that we get, to do all that we do, to have the freedom that we have, and pay your taxes. So
Yes, and important. And then I've ran into people who haven't paid time. They'll come to me and they haven't paid for 7 years.
I know a couple of people.
woo,
And so, but the problem with some of that, let's say anything over 3 years, if you do a refund, if I can kind of like make it, do some magic to help you with your taxes, you're not going to get that refund. That's over 3 years.
mhm.
You've lost it. So it's important that you keep all your records and file timely. File
Yeah.
timely to avoid
Right.
penalties, because you lose. When you got to pay penalty and interest, you do lose.
Yeah.
And it's not even worth it. So file and make some kind, if you got to make a payment plan. But even though, and that's for income tax, and even those out there on sales taxes, I used to always tell them, file your sales tax return, even if you don't have the money, which you should be not commingling as we hear. You should be setting that sales tax aside, but file your return to keep your permit from getting revoked.
Right. Right.
So that's important. So my thing is keep good records. That's key for you. That's to your benefit to keep good records.
Absolutely. Okay, so Janice, please tell us how my brains can get in contact with you if they want to delve a little deeper in taxes, or if they need some assistance preparing for the 2019 tax preparation for the 2018 tax year.
Okay, I email broker Janmarie at gmail.com. So that's broker Janmarie at gmail.com. Also, I'll give you a phone number, 661-803-9179 or 323-691-3613.
And Lisa Artzberger, please tell us how to get in contact with you. If we want to come by for some wine and some wisdom with some wonderful women, if we want to get some information on investing, please tell us how to get in contact with you.
Yeah, my next couple Wine, Women, and Wealth, one in Cardiff, is Wednesday, January 6th at 6 p.m. And then downtown San Diego on Wednesday, January 16th at 6 p.m. And that's the emotional side of money for women. It's pretty cool. And it's also some
cool.
networking. And thank you for coming too, by the way, April. Really,
Oh, absolutely. Let me tell you, and you just have wonderful wine and cheese, and sometimes she has somebody that'll serenade you with guitars. It's a good vibe. It's a good vibe. When you leave, you may not have any money when you get there, but you do feel wealthy when you leave.
That's right.
Francine Rogers.
Hang on. And my phone number is 858-401-9026, or it's Lamona Lisa with an E at gmail.com.
Thank you. Thank you so much. Francine Rogers, now everybody should just be knocking at your door, because there's a lot of people, number one, they don't even want to face it. They don't even want to look at it. They see the bill coming and they just throw it to the side. But the first thing you have to do, brains, with anything is you got to face it. You got to face it. And it's not as bad as you think once you
It's never as
actually
bad.
look at it.
Mhm.
It's just a bunch of numbers. Again, we got experts here. Jan's going to help you with the taxes. Francine's going to help you with the credit. And then after you have all that, then Lisa's going to help you invest it. And I'm going to teach you how to navigate it. Bob and weave, Bob and weave. So tell my brains how to get in contact with you, Francine Rogers.
You can contact me at my website, Purposeful Credit Solutions, and I'm at 877-803-8241, and I'll respond to you right away. Right now, for some reason, it's supposed to be really slow during the Christmas season for credit repair and financial services, and my phone has been blowing up the whole time we've been sitting here. I guess, as we get towards the beginning of the year, people are like, oh, okay, I got to make some resolutions. So that's a good thing. And I'll be more than happy to help. And I do offer a free 30-minute credit analysis.
Well, again, I want to thank you ladies for, taking time out of your busy schedule to get here and be here with my brains and talk a little bit about finance. I love these podcast potlucks. I do them once a month. Brains, I want you to go back and listen to other edgy conversations on Blog Talk Radio, On the Edge with April Mahoney. We talk about everything: art, entertainment, music, science, finance, research, neurolinguistic programming, hypnotherapy. What? All kinds of great stuff. And we do it because we love and we care for you. We're not going to keep all this knowledge to ourselves. That's selfish. Okay. 2019 is going to be a challenging year. It really is. My spirit is telling me that. But if you are prepared and you have the information, you have your armor on and you can go to battle. So again, thank you so much, ladies, for your time. I adore you and I honor you. And we're going to make it through, right?
We are.
We're going to make it over the hump. All right. Bye, brains.
Bye.
Bye.
It was really nice to meet you guys.
Nice to meet you too, Lisa.
Mm-hmm.
Thank you.
Anne Marie, I wrote down all